Did you know that an economic disaster is lurking around your pocket that can even wipe out all your savings or investments? Yes, this is a disaster that 99% of people have absolutely no idea about. Even economists are now sounding alarms about it. I'm talking about stagflation, which is ready to come back and rob you anytime. I know that sounds scary, but you don't have to worry. Instead, you only need to get aware of it, because if you don't, you will end up depleting your money. In this video, I'm breaking down what stagflation truly is, why it's such a unique danger, and exactly what moves you need to make today to bulletproof your finances. I'll share proven strategies for what actually works when this economic nightmare happens, giving you the clarity and confidence to act before it's too late. Chapter 1. The Giant Thief, Stagflation. So let me first introduce you to the term, stagflation. It's a combination of two economic nightmares happening at the exact same time, stagnation and inflation. Stagnation means your economy stops growing, businesses stop hiring, and unemployment shoots up, while inflation means prices keep rising on everything you buy. Normally, these two situations don't happen together, but stagflation breaks all the rules. It's like getting fired from your job while your rent, bills, groceries, and gas prices double. That's why it's called the economic thief. It steals your income through unemployment and steals your savings through rising prices, leaving you broke. Surprisingly, stagflation is even worse than the recession. In a recession, you might lose your job, but at least everything gets cheaper, like your rent might drop, gas prices fall, and your savings can stretch further. But in stagflation, you don't just lose your job, but everything gets expensive too. It's like your car is stuck in mud. You're pressing the gas, the engine is roaring, but the wheels are just spinning, and the car isn't moving forward. That's why a recession punches you once, but stagflation keeps punching you over and over. And the worst part is that the government can't fix it because helping unemployment would make inflation worse, and fighting inflation would kill more jobs. It's literally a nightmare scenario where being broke and everything being unaffordable happen simultaneously. This situation happened in the 1970s, when people watched their life savings vanish. But here's the interesting part. While most Americans were getting financially destroyed, a small group of smart investors who saw it coming actually made fortunes. Why? Because they knew the secret strategies that can not only protect your money, but can make you wealthy when everyone else is struggling. And yet again, the warning signs of an upcoming stagflation are everywhere. But most people are sleepwalking into a financial disaster that could leave them wailing. But the reality is scarier than you think. Chapter 2. The Scary Reality Check. Recently, Jamie Dimon issued a warning. He is flat out telling us that stagflation is coming to America anytime soon. He's concerned that big government spending, ongoing global conflicts, and changes in trade rules are creating a lot of pressure for prices to stay high, making it harder for the economy to grow smoothly. This is evident because the numbers don't lie. Economic growth is slowing down. The median forecast for first quarter GDP growth is just 0.4%, down from 2.4% in the previous quarter. That's a massive drop. At the same time, inflation is still stubbornly high, and unemployment is starting to tick upward. The 8% annual inflation rate of 2022 was the highest level of inflation in the United States since the early 1980s. This is exactly how stagflation begins, like a slow-motion train wreck that you can see coming from miles away. Today, most Americans are living paycheck to paycheck with massive credit card balances and no real safety net. So, if this situation happened, it would be even more dangerous than before. Now think about your situation for a second. How would you handle it if your rent went up 20%, your grocery bill doubled, gas hit $6 per gallon, but your salary stayed stuck? And what if, on top of all that, your investment started losing money every month? Surprisingly, most financial advisors are still giving the same old advice that worked earlier. But this time, stagflation won't be like the normal times. Instead, it would require a completely different playbook. And if you're following conventional wisdom right now, you're setting yourself up for financial catastrophe. So let me show you what the real solution is. Chapter 3. How to protect your money from stagflation. Almost everything you've been taught about investing and saving money could backfire spectacularly during stagflation. Even your savings account could deplete. So if you have $50,000 in a savings account earning 1% interest, and inflation is running at 6%, you're losing $2,500 in purchasing power every single year. It's like watching your money slowly disappear. Even your stock investments would be destroyed, just like the 1970s stagflation period, where the S&P 500 lost over 40% of its real value when adjusted for inflation. Bonds got absolutely crushed too. That traditional portfolio allocation of 60% stocks and 40% bonds that every financial advisor recommends got obliterated during stagflation. And if you think that real estate would save you from this disaster, the answer is no. Conventional real estate isn't a safe option either. Yeah, this one surprises people as real estate also struggles during stagflation due to high interest rates that make mortgages unaffordable for buyers, while rising costs squeeze property owners. Plus, if unemployment rises, more people default on their mortgages. So, this is exactly why you need to be cautious before investing. Chapter 4. Where to invest your money during stagflation. Now the real question is, how would you make your way other than traditional rules? Listen carefully. Here's what you can do with your savings smartly. Number 1. Invest in natural resources and commodities. Think about oil, gas, precious metals, and agricultural commodities, because when everything else is getting more expensive, these are the things that are causing inflation. Let's say oil is $70 a barrel today. During stagflation, gas stations start charging $6 per gallon instead of $3, and suddenly, oil shoots up to $120 a barrel. If you owned oil stocks or oil commodities, your investment just doubled while everyone else is getting crushed by high gas prices. You're profiting from the same inflation that's destroying other people's budgets. So, investing in natural resources provides you with inflation protection, and it has historically performed well during stagflation periods. Number 2. Treasury inflation protected securities, or TIPS, can also be your rescue. Basically, TIPS are bonds, not ordinary, but an inflation-proof bond that automatically adjusts upward when prices rise. Let me give you an example. If you buy $10,000 in TIPS and inflation runs at 5%, your principal automatically becomes $10,500, and you get the inflation adjustment plus interest on top of that. It's one of the few guaranteed ways to beat inflation and stagflation. Number 3. Investing in real estate investment trusts can be a smart move during stagflation, though it depends on the type. Think of REITs as a way to invest in real estate without actually buying a whole building yourself. They're companies that own and manage properties that generate income, like apartment complexes, shopping centers, warehouses, or office buildings. When you buy shares in a REIT, your money is combined with other investors' funds to purchase and operate these properties. Then, the REIT collects rent from its tenants and, by law, has to pay out most of that income, at least 90%, to its shareholders as dividends. So, if you own shares in a REIT that has, say, 100 apartment buildings, you're essentially getting a small piece of the rent collected from all those tenants. Now, let's talk about the sophisticated strategies that can supercharge your stagflation protection. Chapter 5. What winners do during stagflation. During stagflation, smart people invest in value stocks rather than growth stocks. Value stocks belong to companies with steady current profits and essential products. Growth stocks belong to companies like tech startups, whose huge profits are expected in the distant future. Now the thing is, growth companies get killed when interest rates rise during stagflation, but companies with value stocks that make essential products and services have pricing power and generate a cash flow. They can raise their prices along with stagflation and maintain their profitability. That's why value stocks are a better option than growth stocks. The next one brings us to dividend aristocrats. These are the companies that usually have increased their dividends for 25+ consecutive years. These companies typically have incredible pricing power. During inflation periods, they can raise their prices and their dividends. Companies like Coca-Cola, Procter & Gamble, and Johnson & Johnson have thrived during every inflationary period in modern history. While other stocks are tanking, these companies are actually making more money. Another secret weapon is short-term bond ladders. In this strategy, instead of buying long-term bonds that get crushed when interest rates rise, create a ladder of short-term bonds. As each bond matures, you can reinvest at the new, higher interest rates. It's like surfing the wave of rising rates instead of getting wiped out by it. Chapter 6. Tips to save yourself from getting broke. Here's something equally important, and that is knowing what not to do. Firstly, don't panic when stagflation hits. Panic selling locks in your losses and prevents you from benefiting when markets eventually recover. And most importantly, don't load up on long-term bonds. They're sitting ducks during stagflation. When interest rates rise to combat inflation, a 30-year bond can lose 30 to 40% of its value when rates spike. Know that your investments are only part of the equation, and you need to bulletproof your income stream because your biggest asset isn't your investment portfolio, it's your ability to earn money. During stagflation, make sure you're in an industry that can raise prices with inflation. Avoid industries that get squeezed when costs rise but can't pass them along to customers. If you're employed, try to negotiate cost of living adjustments into your salary. If you're self-employed, build inflation escalators into your contracts. Develop multiple income streams because having various sources of income protects you if one gets hit hard by the economic slowdown. Consider side hustles in inflation-resistant industries. In addition, invest in yourself. During stagflation, certain skills become incredibly valuable. Learn skills that help businesses cut costs or increase efficiency, become indispensable by solving problems that stagflation creates. While other people are getting laid off, you'll be the one companies can't afford to lose. Chapter 7. Final words. Look, your financial future depends on what you do next, because stagflation is coming whether we're ready or not. The question isn't if it will happen, but how bad it will be and whether you'll be prepared. During the 1970s stagflation, the people who understood what was happening and positioned themselves correctly made fortunes. Meanwhile, those who followed conventional wisdom and did nothing watched their life savings get destroyed. So, start building that bigger emergency fund. Every action you take now protects you from what's coming. Remember, the goal isn't just to survive stagflation, it's to thrive during it. So, don't wait until stagflation is already here and everyone else is scrambling for the exits. Take one action today, just one. Pick the easiest strategy from this video and implement it this week. Your future self will thank you when you're one of the few people who saw this coming and prepared accordingly. The choice is yours. Make yourself a victim of stagflation, or be one of the smart money investors who turns economic chaos into opportunity. And if this opened your eyes to new possibilities, smash that like button and subscribe for more wealth-building strategies that the mainstream media won't tell you. Thanks for watching.